welcome to Mad Money. Welcome to Cramer. Other people make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach you. So call me 1-800-743-CNBC. Tweet me at Jim Cramer. Sometimes you get these days where it feels like the market has returned to some semblance of what you're used to when things get shaky. I mean, these are the days when J&J will reign supreme, or Merck makes a comeback, or Procter & Gamble has a big run. Or, with crypto taking a little bit of breather, you get a gigantic move in gold. Now, the averages don't show it. Dow gaining 179 points. S&P advancing 0.06%. NASDAQ declining 0.39%. But this was a day of turmoil because the stocks that have been beaten up endlessly, mainly the foods and the drugs and their fellow travelers in the restaurant space, all rallied. While the speculative stocks and anything involving the data center, it's been so hot, they get blown out of the water. It's a day when AppLovin, the company that helps mobile video games grow their reach and monetize their games through advertising, gets crushed, down 4.4%. A day when Coinbase gets hobbled and Robinhood looks weak. And get this. I know it's going to come as a shock. Even mighty Palantir hits a speed bump. Palantir say it ain't so. You can go down too. All right, this is what we call rotation. The stocks have been hit so hard, deserve it. Give them a couple days or even 3 in the sun. So many of them now have high yields. They're perceived as having something to fall back on. Plus, when a good company with a good balance sheet gets that low, it's at least time to cover your short positions. And I saw that all over the place. I'm not going to go against a market that's signaling that interest rates are coming down. That's what today did. And the high flyers have flown too high, while the companies with good dividends have gotten too low. This is just temporary. So what are you supposed to do then? First, know that the rotations are not investable, but at best, they're tradable. Sell. Take Campbell's or General Mills. Both yield almost 5%. Both are good companies, just not as good, maybe not as good as PepsiCo, but they're in the same league, especially because PepsiCo is now up almost 20 points from its low. Why? It's important to remember that PepsiCo reported a terrific quarter with sugar, water, and Frito-Lay, 2 categories that were supposed to be on life support thanks to the rise of the GLP-1 weight loss drugs. Those injections reduce your craving for junk food. PepsiCo sold a ton of junk food. So if people are craving chips and soda again, maybe they'll also crave food from General Mills and Campbell's, neither of which has the calories of Doritos or the chemicals of soda. But let's take a step back for a second. Why is this rotation even happening? I think it's because, once again, the traders are looking at interest rates, imagining that there's going to be a recession. So they're buying up what typically does well in a recession and ringing the register on everything else. I have to tell you that looking at the yield curve, actually measuring where the yield curve is, with the 10-year at 4.3% and the 30-year at 4.9% dropping nicely, that's causing so much nervousness in stocks you have to say, whoa, how long can this rotation go on? Didn't we just pass the biggest budget-busting bill in years? Weren't interest rates supposed to go up, not down? Should we really decide, for example, that D.R. Horton, the home builder, should see its stock soar 17% off that okay quarter? Well, actually, a little better than okay. First, the homebuilders never should have been down so much in the first place, so think of today as a course correction. More on that later. Second, though, these moves are all caused by rates, or at least rates today. Now, I hear all the chatter about how this is the end of the rally that brought us here. We take note of the troubles of Stargate, the creation of OpenAI's Sam Altman and SoftBank, and we reach the conclusion that the data center bull market is over. That fiasco is bringing down a host of usual suspects that have been rallying nicely, including NVIDIA, which fell 2.5%. To me, it's a moment where the winners had to cool off and the losers had to play catch-up. Last night, I said that there's so many speculative stocks that you call on, and light around, with parabolic moves, that the market simply has to cool down. Parabolic moves always end badly. We don't want them to end real badly. Taking their place in the winner's circle are the utilities and the beaten-down stocks like Target with its nearly 4.3% yield, or even Starbucks with a 2.5% yield and possibly a real term. There are some unusual oddities. For example, why the heck are the transports rallying? What is that about? If people think we're heading into recession, as the bond market seems to indicate, then the transports should be getting slaughtered. Does it make sense that GM at a 5 price-to-earnings ratio would be clubbed on a missed quarter? Yes, if the economy is truly slowing down. But what if you wanted to take the other side of the trade? I think you'd be coming in a little too early at this point in the rotation. My guess is that there'll be maybe 2 or even maybe 3 days where interest rates are lower. This was day 1. And you have to wait as the food and drug analysts come out from under the table and start bragging loudly about their flock and about how it's time to buy. That's what those guys always do. See, I can see where Procter & Gamble could have another good day, maybe even two, based on the weaker dollar. What analysts could resist a price target boost there? Which analysts are going to resist going out positive on J&J, which has moved up every day, seemingly, since the last quarter? Since they announced that quarter, maybe the food analysts can talk up mergers. These are all they're reasonable presumptions. And they will preclude a serious tech rally or a speculative surge. Hear what I said? Preclude. It's still too early to buy the momentum stocks. These rotations usually sap you for 3 days. They continue to try to make that point. Today's day one. Of course, that could change if interest rates suddenly jump higher. But it would be best to accept that the food and drugs can have a couple of days in the sun, can't they? The old leaders pull back a little, can't they? Don't be in a hurry to buy Lam Research or Applied Materials or KLA from the semiconductor capital equipment side. Not after we had Texas Instruments on tonight. I wouldn't step in front of the falling knives that represent any of the meme stocks, save Kohl's, which we'll talk about later. I know it's hard with so many people saying that this is the beginning of the big correction to point out that plenty of stocks are actually doing quite well or just playing catch-up. But that's all they're doing. The market hasn't changed stripes, but the people who come on TV have. It's just wearing a different style for a few days while it waits for the dry cleaning to come back. And in the case of Dan Ives, maybe, I don't know, never. The one thing that's truly irrational here is that the bond market itself is signaling all the wrong things. The president passed the most aggressive budget-busting, beautiful bill imaginable. For months, all we heard about is how our country's in trouble because we added $3 trillion or more to the budget deficit. So how the heck can the bonds stay strong, meaning rates go low? The answer? The bonds are wrong. They'll soon revert to going higher in yield and lower in price, but right now, people seem to have forgotten what they've been worrying about for many months. The bottom line, okay, listen to me. I say let the rotation play out. Give it some space. The stocks that are rallying have been down for days, maybe weeks, maybe even in some cases months. They aren't going to start going down again until we forget what Stargate was, or confuse it perhaps with Starbucks, or Star Wars, or even Star Trek. And we get a couple of earnings reports from the consumer staples that are disappointing. Well, you can certainly count on those. Then again, then we'll be back buying all that stuff, including a Palantir, which is what you call Palantir when it's going down. But not until then, so don't jump the gun. Palantir. Don't you love that, Palantir? I mean, come on. All right, Ann in Indiana. Ann.
Hey, Jim. Thanks for taking my call. So I saw an article in the Wall Street Journal about J.P. Morgan, but they mentioned that Goldman Sachs private credit division financed part of the Walgreens Shields deal, and the leverage was 9 on the deal. Is that the kind of business they're going to do in their private?
I don't know. Rob Sweeney, my friend Rob Sweeney, or my wife would say an acquaintance Rob Sweeney, is doing that deal, and he's real money good. So I see why they might have done that, and Tim Wentworth's there too. I don't know. I mean, I'm a believer. I wouldn't leave that deal even if I tried. Let's go to Brian in Massachusetts, please. Brian.
Hey, Jim. Hope you're doing well and got to catch the UFC fights this weekend. It was a great fight between Holloway and Poirier, two of the greats.
Excellent.
On that topic, with TKO's upcoming sports rights renewals likely to go for a significant AAV multiple and the recent integration of UFC and WWE's global partnership teams, how much upside do you see from the cross-promotional advertising?
Okay, that stock is a momentum stock, and I'm saying that momentum's got 2 more days of downside, and it worries me. I'm not going to jump on the TKO bandwagon if we have 2 more days of momentum pain. I'm talking about
the House of Pain.
And I'm not a player. Look, we have to let the rotation play out. That's all I'm saying. Don't jump the gun yet. On Made Money Tonight, Domino's was up and then down all around after earnings. I'm breaking down the action, showing if I think the stock is more than the run. Then for years, we've seen this incredible run in the price of cattle. So is this rally just beefing up, or could it begin to move lower? Can you tell the stuff that I write versus others? All right, I'm going out to the charts to find out. And look at D.R. Horton go, up over 16% today. Should investors start building a thesis on the home builders, or maybe take a wait-and-see approach after this monster bounce? I'm going to give you my take, so stay with Cramer.
Don't Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.